Brace the rudders! Raise the sails! Raise the sails!
Captain, an unidentified ship is approaching. Over.
Roger. Wait, is that an enterprise sales solution?
Reach sales professionals, not professional sailors. With LinkedIn ads, you can target the right people by industry, job title, and more. Start converting your B2B audience today. Spend $250 on your first campaign and get a free $250 credit for the next one. Get started today at linkedin.com/campaign. Terms and conditions apply.
The family that vacations together stays together. At least that was the plan. Except now, the dastardly desk clerk is saying he can't confirm your connecting rooms.
Wait, what?
That's right, ma'am. You have rooms 201 and 709.
No, we cannot be 5 floors away from our kids.
The doors have double locks. They'll be fine.
When you want connecting rooms confirmed before you arrive, it matters where you stay.
Welcome to Hilton. I see your connecting rooms are already confirmed.
Hilton, for the stay.
From 11FS, this is Fintech Insider News live from the Village Underground in Shoreditch. All right, great work. Thank you and good night. I'm Ross Gallagher, Head of Ventures at 11FS Group, and tonight we're covering Starling's new look and its campaign to help people get better with money. Are banks facing a loyalty crisis as Gen Z trades institutions for influencers? And we're celebrating 1,000 episodes of this very show. Like that. To discuss these and some more of the biggest stories in fintech this week, I'm joined by genuinely some of the hottest experts in fintech right now. First up, we have my co-host and 11FS colleague, Strategy Director Kate Moody. Kate, as always, an absolute pleasure. Welcome back to After Dark. Look, our 1,000th episode, maybe you could kick us off with a memory, one of your earliest memories of the podcast for us.
Yeah, well, I think my first episode, had to go back and check, was episode 371, so I skived off. I wasn't there for the first 300 or so, which is a bit lazy. But we had former CEO of Monzo, Tom Blomfield, on as a guest. So it was quite a fun way to kick off. I think there'd been some sort of minor scandal about Watchdog or something that he was keen to correct. But yeah, we recorded it about 2 days before I went on honeymoon. So my very patient husband, when we arrived in South Africa, instead of us going out to explore Cape Town, sat with me and we listened to my first ever podcast on our honeymoon, which probably is representative of the amount of fintech he's had to put up with since then. But it's been fun since then.
True love, congratulations. Next, we have Charlotte Crosswell, Chair of Raidiam, and Fintech Ned. Charlotte, as ever, great to have you on the podcast. Maybe you can reintroduce yourself to our wonderful guests and tell us a little bit more about Raidiam.
Thank you. Great to be here. So I sort of feel I've been through various cycles of fintech for a long time. Currently executive chair of Raidiam. For those who don't know that builds trust frameworks. Particularly has been well known in the UK open banking space, but went on to provide the technology behind Open Finance Brazil, currently building in UAE, Australia, New Zealand, and hopefully waiting for more activity in smart data in the UK, which is coming soon. So that's great, and also sit on the board of another fintech called Free Market FX as well.
Awesome. Well, thank you for joining us to share all of your wonderful insights. Next, we have Marcin Glogowski, SVP and MD for Europe and UK CEO for Marqeta. Marcin, again, great to have you back on the show. Maybe you can tell us a little bit more about what you've been doing since we last spoke.
Thank you. Great to be here, sharing a bit about myself and my journey. I think I started being part of financial services before fintech was even working. I think it existed as a concept, but the tech was not there to make it really happen. I think moving forward, I joined Marqeta a year and a half ago approximately, and learning very, very different part of the payment ecosystem, which is issuing, very, very specific, very nuanced, understanding how relevant it is also for the future of consumer SME experience, how much can be created as competitive advantage, not only by fintechs as such, using issuing element, but also by more and more companies that are not in financial services by themselves, but they see adjacency in adding the financial service context into everything they bring and strengthen their value and offering to their customers. So glad to be here.
Awesome. Great to have you, Marcin. Thank you. And last but not least, the wonderful Sarah Koshansky, another Fintech Insider OG. Sarah, no stranger, of course, to an After Dark stage. Great to have the gang back together. Do you have a favorite Fintech Insider moment that you can share with the group?
So this is a very hard question. So when I knew I was going to be joining you this evening, I asked executive producer Laura, how many episodes of that podcast did I do? She said, oh, I don't know, we've never counted. So I was like, right, fine, I'm going to work it out. So excluding InsurTech Insider and Blockchain Insider, which some of the OGs might remember, I have done 322 episodes of this podcast. I could sit here and tell you my favourite moments, but honestly, we've got, 45 minutes, and nobody wants to hear that. So all I can say is I remember my first ever episode of doing this podcast before I started working for 11FS. I was working for a company called Business Insider. This guy called David emailed me and said, we love your newsletter. Like, will you come along and kind of be a guest on our podcast? At which point I was like, podcast? What the bloody hell's a podcast? All right, fine. I turned up at level 39, which is where 11FS were based at the time, and find these three guys sitting around a round table with a bottle of wine and a mic in front of them. I'm like, okay, here we go. 3 hours later, and more than one bottle of wine later, I wobble out of level 39 and head off home. When I get home, I have a message on my phone sent via Twitter, now X, from David saying, that was fantastic, want to come work with us? Of course, at the time, I was like, yeah, okay, whatever. 6 months later, he lured me in, and that was the beginning. So there you go. It's my origin story, if you like.
Origin story seems perfect for this occasion, and those really were the good old days. So thank you for that little walk down memory lane. Right, we have our brilliant panelists. We have our amazing live audience. So now we just need some news, right? So let's jump right in. The first story comes from FF News. The headline, Starling unveils new logo, app and cards to promote Good with Money mission. So Starling has revealed a new look logo, app and payment cards as it launches its brand mission to help people in the UK become, quote, good with money. Updates to the app include an AI-driven feature letting customers query their spending in natural language and a new AI-powered image customization capability for spaces. Starling has also announced a revamp of its Easy Saver product, with every aspect of the new experience designed to encourage customers to take action over their finances and rethink how they budget, spend, and save. Starling has also partnered with Arsenal FC in a multi-year deal to promote financial literacy and community impact through its Good with Money mission, combining educational content with exclusive fan perks and grassroots support. Starling has certainly been busy. As we're recording this live in London, do we have any Arsenal fans in the audience or on the panel? I thought that was going to absolutely bomb for a second. Kate, not an Arsenal fan, famously. But if you were to put that rivalry to one side for a moment, do you think sports partnerships like this can genuinely drive sort of financial behavior change, or is it just sort of clever brand alignment plays?
I mean, I can't work out if it's just because I spend too much time thinking about fintech and financial services, but it does just feel at the moment like everywhere you look, you are seeing, fintechs and banks sponsoring things, maybe in a way that they weren't 5-6 years ago. Obviously, we've got Chase, being the official banking partner of the home nation's football team, men, the women's, the youth teams as well. We hosted a podcast quite a while ago now, but we were talking to people from Lloyds about their partnership, British Cycling, Air Wallet's obviously sponsoring the Formula One. All sorts of different fintechs are using sport as a means to kind of broaden their engagement. I mean, whether it's actually driving fundamentally different behaviour from consumers, I think is debatable. I think most of the people we speak to are talking about trying to get their brands out there. They're really trying to kind of build that credibility. They want to be recognised and trusted names. So, yeah, I remember obviously when we interviewed the CMO at Lloyds, he talked about really kind of expanding equity, about the breadth, the ability to reach out to different communities. And I think that's what all of these different companies are competing to do now. We've got such a crowded marketplace now of fintech challengers, banks that have rejuvenated themselves, are really kind of competing again. So we've got a fantastic competitive market now in the consumer retail banking space. And I think these partnerships are a part of the way in which people are trying to differentiate. Obviously, we'd like them to be differentiating through their actual products and experiences as well. But obviously, just trying to get the name out there is key.
It's an interesting one, isn't it? And it's a good point about those partnerships. I remember looking at OKX being sort of positioned as Manchester City's official crypto trading partner. And it's kind of like, it's interesting to think that a football club needs an official crypto trading partner. Charlotte, do you think there is anything that sort of beyond just the brand equity that Kate mentions? Do you think it offers, I suppose, a different platform to engage people in a conversation about financial services and how they manage their personal finances?
I think the challenge you've got is that traditional marketing and advertising just isn't resonating, especially with younger people. But I think it's for everyone. Everyone has 30-second reels that they're watching and making decisions on. So you've got to look at it a completely different way. Of how do you capture the attention, and then how do you capture the attention of the things that really matter as well. How they measure return on investment, I think, is a really difficult one. I commend Starling for looking at financial literacy. I mean, it's a really important topic, so we shouldn't take it away. Is this about brand? Is it because they really care? I think it could be both. But I think that's what's important, is how do you market in a world where it's so crowded, there's new brands coming through all the time, and people don't necessarily know what everything stands for. Perhaps sort of shiny thing over here attracts you one day. Nobody has just one bank account anymore. They have the average is 7 fintech accounts for every individual. So how are you going to get people to move when you need to and offer something else? And branding probably is everything at the moment.
It's such an important point. And I think even if all of the best intentions are there, it is a difficult sort of, I suppose, bridge to sort of engage people in these conversations. Financial literacy has historically been low. That's borne out in the sort of Good for Money campaign that Starling have done. They found that 53% of people say managing money is hard, 38% worry about it daily. I think that's reflective of where we're at right now with the cost of living crisis and everything like that. Sarah, what was your reaction to this story in terms of, how achievable do you think this is to really sort of engage people and help shape more positive financial behaviors?
Yeah, I think it's really interesting. I didn't see much about what they were doing with Arsenal, to be honest with you. But
there's a fun video of David Seaman trying to explain sort of how to protect your money with lots of goalkeeper metaphors.
Funnily enough, I actually know who David Seaman is, which is a miracle for anybody who knows me. Ponytail, right?
Yeah.
Yeah, okay. Just checking. So I think the point about what banks are trying to do and kind of like helping people look after their money is something that is a concept that isn't new. And I think it's a concept that you also see that insurance companies are trying to work more on at the moment, which is the idea of prevention rather than cure. So how can we help you avoid getting into a situation which is negative? And how do we do that? And I think for a long time we've talked about kind of banks, and certainly the digital-only banks, being able to say, we can tell you where you're spending your money. We can tell you kind of, what categories you're spending on. But that's no use unless it's kind of an actionable insight. And I think that's kind of what's interesting about, if you read through one of the new things that Starling is launching, one of the new features is that when you get paid, you can automatically segment your money straight away into separate pots. So that makes it much easier for you to manage your money if you know instantly, right, so I'm getting paid, let's just say £1,000, and £500 of that is rent, and £100 of that is bills, and £100 of that is food, and then that gives me, whatever it is, £100 disposable income. If your bank's doing that for you, it's showing that they care. And I think that's kind of the general sentiment we're getting from financial services institutions at the moment. How effective it is, I think, is yet to be seen.
Marcin, where do you think that line is, picking up on Sarah's point, between sort of banks playing an active role in shaping behaviors, financial wellness, and I suppose sort of being seen to almost dictate or patronize customers?
Thank you. And I think this is not only interesting, but also very relevant and timely question. And we recently published the State of Payments report, and one of the numbers that is standing out is for the UK consumer market, 34% of population say they see a need, they see a value, they are interested in, first of all, AI-based and AI-powered wallets that not only give them number of options to pay, but and include also in supporting the decision-making with their behaviors, their preferences. So there is very specific need, but in the same time, providing guidance may feel to some as a form of dictate rather than an advice. And I think there is always, the question, what is the right balance between the smart, intelligent support and suggestion vis-a-vis dictate? And I don't think that the borderline is the same for each and every user and person. So it's really down to allow and put the user in control, defining for himself, sometimes even in particular situation, what is the level of control I want to take and what is the level of freedom I want to give to the tool. And I think those who are able to make it very individual, down to user, consumer feeling comfortable in the same time, provided the advice but still staying in control, I think that's the key to success.
Yeah, I completely agree. Those sort of fine-grained permissions, almost sort of that personalization element, and people feeling like they're not giving away more control than they're necessarily comfortable with. They're still in control, but the tool, the platform is working for them. Kate, we mentioned in the introduction that there's a couple of ways that they're thinking about sort of leveraging AI, letting people query their spending patterns and behavior trends, et cetera, using natural language, so maybe making it a little bit more accessible, making spaces that a little bit more customizable. So again, making that feel a little bit more intuitive, a little bit more personal to them. Do you think that goes some way towards maybe addressing some of the points that Marcin has raised?
Yeah, potentially. I think I'm really excited to see how it kind of embeds into the experience. I am kind of a Monzo customer rather than a Starling customer, and I've sometimes wondered if I sort of maybe made the wrong choice, because when I look at it, I can see that Starling do have some kind of cool functionality that they've attached to their spaces. They actually allow you to attach virtual cards to your spaces within just the main free account, whereas obviously with Monzo now you have to pay to access that through the premium tiers and stuff. So I do think we maybe sometimes are a bit guilty of ignoring Starling, and I wonder if that's part of the reason for the rebrand, that they are kind of trying to draw attention back to themselves again. But they do have some really, really, really awesome features. They've got a really great offering. I think they rank consistently so really highly in the CMA Customer Satisfaction League. They're doing really great stuff, and maybe they have kind of slipped off the radar a little bit. And with kind of this new technology and potentially with a bit more momentum behind them, it'll be interesting to see if they can start to challenge, because maybe we've sort of assumed that Monzo is the default leader in this space, and Starling maybe need to come back and fight their way back into the conversation.
It's such a great point because, like you said, they rank number 2 in the CMA's Customer Satisfaction League table. That's 2024 rankings. Over 80% of customers would recommend it. I think that's incredible for a bank. But they don't get the same media time. They don't grab the same headlines as Monzo, Revolut. What do you think about Kate's point, Charlotte? Do you think this is maybe an attempt to reset that dynamic?
I always sort of look back to when they were both launched and who launched them and why they launched them. And I may be making a huge generalization, so don't call me out on this. But do you think Anne Boden came in to make banking better and to make it more efficient and to run a better service? And we talk about profitability. She made it profitable. She was the first to do that because she could see how, from her background, how a bank was run and how you could be more efficient and deliver still a great customer service, still having people on the phone. When elderly people wanted to call someone up, they could call someone up. It was really easy. And when Thomas went to Monzo, to set up Monzo, he very much looked at it saying, what does the new customer want? And I'm going to build it from a customer first level, not from a banking first. And so, you can see that, right? The hot coral card. Do they still talk about hot coral cards? I don't know, because everyone has it on their phone. But, there was just that brand piece, and everyone thought that's the cool one I want to be associated with. And, and I think it's like the older generation went, okay, I like Starling because that's quite stable and that's it. So I think, they've always built from that. And I think with this slight change from Starling, I wonder if that's them trying to go, okay, should we start building this now with more from a customer up to maybe attract a slightly younger generation, but also to give us growth. And I still think Monzo thinks you're a cool customer. The young kids, I think they all go Monzo. I don't know a single one. The teenagers moving from the kids' cards, go to Starling. But they're all going to be 5 years' time. They're going to be in their 20s and earning money. So it'll be interesting to see how they diversify from that.
Yeah, absolutely. Marcin, if we come back to the satisfaction levels that we mentioned and people being willing to recommend Starling, for example, in such big numbers, how sustainable do you see that as, they race to acquire customers, they acquire less tech-savvy customers? Do you think that those satisfaction levels are sustainable?
I think it's always down to delivering on the promise and satisfying the need that was built and matching that with reality. And if that is the case, I see no reason for that not to continue unless the other players, unless the competition will bring something even better, even more meeting the needs. And that's always a competitive game in the end.
Of course. And Sarah, final point on this one, but I think it's an important one. For so long we talked about scale ahead of profit, and the customers are happy and they like the experience, but they'll never get salaries and all of that sort of stuff. Like Starling have been profitable now for 4 years, so again, a very successful fintech. Do you want to talk a little bit about that?
Yeah, I think it's interesting. I think whenever we talk about profitability with these digital banks, we get a bit hung up on it. But if you look at it, Starling has been profitable for 4 years. Monzo has been profitable for 2 years. We can mention the R word. Technically not a bank, which means if you're going to go into conversations about net profitability, see me afterwards. But I think what you have to look at is the sustainability of the business. And I think one of the conversations, one of the points that's been made this evening in various iterations is that what are you doing, who are you trying to serve, and how are you trying to do it? So I think if you look at the fact that Starling has, to the point that the phrase that's in my notes in front of me is slow and steady. Yes, they're profitable, and they've done what they've done, and they've done it well. But are they now at the point where they're like, this isn't enough anymore? Because some of the products, if you look at it, some of the products and features that they've announced in this press release that we're discussing this evening are products and features that Monzo's had for a long time. And arguably, Monzo has a lot more products available live to its customers now. If you want to talk about insurance, if you want to talk about investments, mortgage trackers. Now, if you're launching more products and services and more products and features faster, then you're spending more money, which means you're less likely to achieve profitability in that given year. So it's definitely a trade-off. I think what we shouldn't ignore is that certainly Monzo and Starling, both fully licensed banks, both have done an amazing job, given where they came from, to be profitable at this point when there were so many naysayers. And forgive me if you're out there, I can't see a blinking thing in these lights. That the British media has often been against them, certainly the biggest names in the media. The only time you ever hear about Monzo or Starling is when something goes wrong. Somebody's sacked, somebody's fined, somebody changes their working hours, their working pattern, and that's all you ever hear about them. And even despite that, they are thriving, successful businesses. And I think that's what we have to remember, that they have changed the banking landscape in the United Kingdom. Certainly those two, and, for all... It's a long checkered history. Go back and listen to those 322 episodes if you want to hear my thoughts on Revolut's journey thus far. But they are all very successful businesses, and they have all changed the face of financial services and the way that people in the UK interact with financial services. So I don't think we should pit them one against the other. Again, I could write you a report on the analysis as to who's most profitable and why and when. At this point, it doesn't really matter. It's just brilliant. They're still here and thriving.
No, I love it. Spot on. I also love that you're out here giving people homework. It's just 322 episodes, guys, at your leisure.
I almost got a T-shirt printed, but
Yeah, but I think, look, bringing it back to the headline, I think one thing we can probably all get behind is the mission, right? We can all absolutely back the idea of helping normal people build their financial literacy, get good with money, build better financial habits and behaviors and a better financial future. So hats off on that. All right, let's move on to our next story. This one comes from Payments with a headline, Banks Face Loyalty Crisis as Gen Z Trades Institutions for Influencers. When are Gen Z not causing crises? Right, according to recent research from Payments, the financial lives of Gen Z consumers based out of the US look very different to the financial lives of previous generations. Data from the 2025 Databooks report by Payments Intelligence shows that, we're going to go Gen Z this time, are saving more aggressively than their older counterparts, squirreling away 36% of their income over the past 6 months versus 27% for other age groups. How they're saving is also different, with their savings typically diversified across things like digital wallets and crypto, alongside traditional checking and savings accounts. According to the report, 81% of Gen Z said that their financial decisions were shaped by influencer recommendations. Now, if this trend continues, the traditional banking business models based on deposit lending spreads could potentially come under threat, with the report calling this a warning sign for banks. Sarah, I'll come to you first on this one. I suppose, what's your immediate reaction? Do you think it's as fundamental as those sort of warning signs suggest?
I think there's some interesting things in this. I think the diversity of what this report calls savings, and for those listening, I'm doing little, bunny ears, is interesting because they're talking about putting their money into crypto or kind of putting their money into stocks and bonds. And I'm like, well, that's investing, and that's a different thing. And therefore, drawing the point out of that about kind of the traditional banks, commercial model is not really relevant. I think what is interesting is that this age group seem to be, for better or worse, more interested in finding out about finances. And if that does mean, I think the article also references how many of them are using social media and finfluencers and TikTok to find out what they should be doing with their money. I think that level of interest is something that should be encouraged. I think the fact that they are diversifying where they're putting their money is actually very sensible, and I think that there are some of us in the other age groups who could look at that as well. People who just go, I'm going to max out my ISA every year, particularly with the current government mooting what they're mooting. So I think it's an interesting survey. I think it's worth looking at the data in a bit more detail, and obviously I would say that because it's me. But I think what we should be applauding this generation for is basically having an awareness of what they're doing with their money and trying things and being creative with things. And we just have to make sure that as financial services providers, we're making sure that there are some guide rails in place. That doesn't mean that finfluencers don't have a place. Look at me, I'm the sort of person who uses the word finfluencer now. Anyway, there isn't a place for them, because there absolutely is. And if you look at some of the brands we've literally talked about in the previous story, they're all getting on board with it. Monzo's TikTok account's got over 100,000 subscribers. What's really interesting, just to go off on a little bit of a tangent, not that much of a tangent, I promise, is that Monzo's most recent piece of, brand advocacy, marketing, if you like, is to write a book and publish a physical book called The Book of Money. And obviously, I blinking love that. But the point is, it ties back to this point about financial literacy, financial education, and trying to help people understand what they should be doing. And the point being that the reason that Monzo has so many, TikTok subscribers and Instagram followers and whatever it is that young people are engaging. I mean, obviously some people my age as well, but presumably most people younger than me, because I do not have a TikTok account.
Yeah. I think there's parallels actually to one of the points that we made on the previous story, which is, I suppose, where does the responsibility lie to help people build those better financial habits and behaviors? And if the banks aren't going to do it, then there are these influencers out there and people can go. And I know we all, straight away, I think my brain defaults to like scammers on TikTok trying to get you to put your money into fake crypto accounts, whatever. But, there's actually a whole heap of very legitimate people that are offering very sound advice on channels like YouTube or Substack or whatever else. And it's in a format that people want to consume. It's out there. Should we necessarily be that scared that people are, obviously it's not regulated, but that people are consuming this type of content and trying to learn about?
I think we have to worry about it because we don't know what they're interacting with, and therefore, when is it regulated and when is it unregulated and when do they know? So I think, that's the challenge. Back in my day, we would be told by your parents, you must go and get a job and you must save a deposit for a house and you must get on the housing ladder and then spend the rest of your life you're paying off your mortgage so that your kids can then sit there and do the same as you. And that's just not the same now. They're not given that aspiration because getting on the housing ladder is impossible. So therefore, we're looking at a completely different way of interacting with money, where you're trying to save for something, but it's not a house, and you're trying to enjoy life along the way. So you might be saving for a holiday, but not necessarily a house, and you might think about saving. I think people are quite savvy about pensions, interestingly, because they probably haven't got the assets that we aspire to have. So you take my focus group of one, a fintech savvy 17-year-old who probably tells me more about fintech than I need to know. But it's just fascinating how she does it. I was really worried when you went, oh my God, she needs to have cash, because cash, you want to understand the value of cash, and of course then nobody pays you in cash, so eventually she's on her Monzo account. And she said the other day, she still keeps cash in the drawer, interestingly, because she goes, and I keep saying it doesn't make any interest in the drawer, so it's devalued. And she says, yeah, but the good thing with cash is it doesn't really mean anything, does it? Because you just spend it, it's gone. I don't want my bank balance to go down. I'm like, wow, I thought it'd be the other way. And she just thinks cash is like a piece of paper, whereas the stuff in her account, she goes, I'm not touching my account. I'm sitting there. And, and so, how we've changed that, and so that's changed even the last 2 or 3 years of how people are interacting with it. And I think because of all the apps we were talking about on the challenger banks, and they're not really challenger banks anymore, just new banks, is that they are able to understand this now and get a better feel of where the money's going to. So I think we've got another few years where you can see a journey. But yeah, so she's also telling me about sweat coins and crypto, and how the guy on crypto who can make a guaranteed 100% return on her £500. I mean, can you imagine? Yeah, I know more than you, Mum. So I just think, we're going to have to work out how we're going to interact with them and how we're going to educate them. But they're not going to listen to their parents, I can tell you that.
That shift is fascinating, because I think the traditional wisdom for older generations was exactly the opposite. It was the only way that you can keep track of your spending is if it's in physical cash, and if you're using a card, you don't see it and it's going to go down. It's really interesting. Okay, one of the things we talked about on the previous story as well was the partnerships between banks and, for example, football clubs. Do you see an opportunity here for banks to partner with some of these influencers to sort of, I suppose, reach a different demographic that they're not necessarily engaging today?
Yeah, I mean, I think, as we've mentioned, I think lots of banks are doing that. They are trying to form partnerships. Obviously, I'm sure there are significant teams of people in large banking organisations who are out there researching the best influencers that most align with brand values and all these other important things. But I think, I'm sure influencers would have become a thing anyway, but I think they are having the cut through they are having because we still have this enormous advice gap that we just haven't solved for. When I joined 11FS 7 years ago now, it was probably one of the first things that kind of kept consistently coming up in conversation when we went into large organisations, this brick wall of we want to be able to help customers more, but we just don't have the regulatory clarity about where that advice guidance boundary is. And 7 years later, again, maybe I've missed it, but it doesn't feel like anything has really been worked out. It doesn't feel like we've made a decision as an industry about how we are going to provide advice at scale in these digital environments. Like, people are now starting to experiment and push the boundaries, but influencers are stepping into a gap. So I can understand absolutely kind of criticism of them, and we do need to regulate it. But I think, it's one of my main frustrations, I think, is that we haven't worked out as an industry how to make advice work in the digital space yet, because it feels like we're letting a lot of people down.
Yeah, that advice guidance gap is huge. And I think the impact that it's having is absolutely enormous. Marcin, I know at Marqeta you guys recently released your State of Payments report. I'm sort of keen to hear some of the insights from that, and maybe if there's anywhere that you've seen a little bit of overlap or difference in the statistics we've been discussing.
Thank you. I don't think that it's different. I think it's quite aligned, to be honest. So starting from just realize that more than 70% of UK consumers aged 18 to 34 years, they don't imagine they want integrated app that offers all the payment option in. And I think what it really means is what historically was a competitive advantage, that is convenience and choice, that becomes a new baseline. This is coming as granted for everyone who raised in reality of everything that fintechs built. it's nothing super, it's nothing extra, it's just granted, it's by assumption, should be coming. And I think in this world, the only way to further differentiate is provide further personalization. It's go beyond the standard, offer very unique and contextual rewards, and try and build, and I think this is a holy grail of financial services that is very hard to build the emotional connection. I think historically I've seen many financial services companies believing that they, by nature of what they do, they build an emotional connection. It's not really there, right? But I think this is holy grail, how to build that, again, emotion in context of financial service. That's possibly something that is possible.
Completely agree. Sarah, we've talked about savings, we've talked about investments, we've talked about payments. What about sort of Gen Z as it relates to sort of debit versus credit? The traditional wisdom has always been that Gen Z don't really like credit. Of course, we've seen things like buy now, pay later really take off over the last few years. We've seen Klarna with their sort of headline-grabbing IPO. What are your thoughts around that space?
Yeah, so buy now, pay later is really interesting as a financial instrument. Funny enough, I wrote an article about it recently, and I emailed about 15 people, as I always do, saying, do you want to talk about this? And they all got back to me, which has never happened before. So I spent a lot of time talking to a lot of people about buy now, pay later. But I think what's really interesting is 2 points. Well, there's probably 3 points to it. I think there's a quote that a lady, I'm going to read it out of my notes so I don't get her name wrong, but Professor Céline Atelier, who's the head of marketing and consumption group at the University of Bristol, she said the amazing thing about buy now, pay later is that it unconstrains the financially constrained. Now, to hark back to Charlotte's point, who is the most financially constrained demographic right now? You could easily argue it was Gen Z. Of course, there are people across all demographics who are struggling. But you could easily argue that it's them. And so that's perhaps one reason why they're so drawn to the idea of buy now, pay later. I think another thing is, and Professor, honestly, I could have chatted to her for hours, but another thing that she said is that once you've used buy now, pay later once, you're far more likely to use it again because it basically triggers excitement in the reward center of your brain. So once you've used it, you're far more likely to go back, and you're also far more likely to put more into your basket. Whether that's a good thing or a bad thing is a whole other topic of conversation. But what it does mean is that you have this generation of people who are interested and willing to try out new digital tools, of which buy now, pay later through apps like Klarna is one. And are sort of essentially, if you like, getting hooked is the wrong word, but that's kind of how they think about credit, as opposed to the idea of a Barclay card. No offense to Barclay card, first one that came to my mind. You could also say Amex, any other credit card group. And I think the third thing is that the association of credit has sort of slipped away a bit within the ecosystems that organizations like Klarna are building. So when some of the people who use Klarna regularly think about Klarna, they don't think about it as buy now, pay later. They think about it as how they shop. So anything they want, they go to Klarna. It's all in an ecosystem. They can pay, to Marcin's point, in many different ways, should they so desire to do so, with a debit card, a credit card, a bank transfer. But that's an ecosystem which in their head is shopping. Klarna is shopping. It's not like me who would go to Google and type in, what's the best running shoe. Obviously, I don't run, but there was a conversation earlier about running. I might hike, but that's how I might shop, is go and look at a load of different reviews for hiking shoes or whatever it is. Whereas the people who are using Klarna are now sort of, that's their ecosystem, and therefore buy now, pay later is part of it, and that's how they think about credit. So a very convoluted answer to your question, but I think it's a really important one that we continue to consider when we think about how younger people envisage the entire financial ecosystem and what the different terms of savings, debit, and credit mean. To go right back to the beginning of the point, some people think that putting their money in crypto is saving, and that's not their fault. That's just the way that kind of the ecosystem has evolved.
Spot on. Before I move us on, can we do a very, very quick temperature check in the audience? Has anyone made any financial decisions based on something they've seen on social media? Can you give us a whoop?
Whoop.
A couple of Gen Z in. Sweet. All right.
Finished training for the day? Time to fight post-workout fatigue with Core Power Protein Shakes. They're packed with 26 grams of high-quality protein to build muscle and electrolytes to help hydrate. The nutrition you need to help your body replenish, rebuild, and repair post-workout so you can power on to the next one. Champion your recovery with Core Power. Visit corepower.com to learn more.
In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001 or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's vanta.com/insider.
Okay, let's move on to our third story. This one also comes from payments, with the headline, Meta lets small businesses offer in WhatsApp payments. Sorry, I'm really over-articulating that. It's quite a hard thing to read. Meta has introduced a new feature allowing small businesses to accept payments directly within the WhatsApp business app. Merchants can now share QR codes with customers in a single tap, enabling quick and efficient sales closures as customers can pay using their preferred payment method within WhatsApp. Businesses can simultaneously use the WhatsApp business app for daily interactions and the WhatsApp business platform for handling increased customer messages and automation, all without changing their phone number. Meta first tested payments in India with similar in-chat payment capabilities already available in markets like Singapore and Brazil, but no time frame has been confirmed to roll out the feature elsewhere. Kate, I'm going to come to you first on this one. I know there was a little bit of debate and confusion among the panel before the show about how this actually worked and the value. What's your reaction?
Yeah, I just couldn't work out if I was being really dense. I was trying to understand what the benefit is of receiving a QR code on your phone in WhatsApp rather than like having it sort of physically somewhere for you to scan.
Would it help if I did my boring explainer of how it actually works?
But I think, yeah, Marcin and I were having a good conversation about this before, and I think this is just reflective of where India is as a market, where just the use of QR codes has just massively taken off. Obviously, with the success of UPI, just the uptake of digital payments generally, of which QR codes has played a huge part, I think just means that maybe what seems mad to me as somebody that kind of still struggles to scan a QR code on my phone when I'm in a restaurant and want to pay, I'm probably not able to understand what it is like for an Indian consumer who receives this. So I think it's obviously anything which provides small businesses with more optionality about how they can allow a customer to purchase something is a good thing for small businesses. Like, we know how difficult it is for small businesses to run and to thrive, and they're juggling so much, just from trying to find ways to accept payments, finding ways to have backups for when those payments inevitably probably fail, whilst also trying to reconcile different payment methods, stay on track over their earnings, and report things in the way they need to report them, depending on their geography. So yeah, I think it's a really exciting potential initiative. I just couldn't quite get my head around it, and was panicking about what I would do if I received a QR code in WhatsApp. But maybe that's just a sign of how desperately millennial I am, and now obviously redundant.
Yeah, we did spend a little bit of time kind of when we were prepping the show, researching how it actually worked. For anyone that is interested, you get the QR code sent to you in WhatsApp, you open it, you download it to your camera roll, you then open the Paytm, the Indian payments app, or your Google Pay app, for example, click, scan a QR code, then it opens the camera, but there's also an option to upload the QR code, which you can then upload from your camera roll, and then you can initiate your payment. Make of that journey what you will. But Marcin, Kate quite rightly made the point that you explain quite well maybe what some of the reasons or the drivers for that demand in those markets could be. I think it'd be interesting if you could sort of share that with our audience.
I think it's down to understanding what is the real need, what is the real problem beyond the customer group or geography. I think it's saying on a very high level, but I think what the particular problem is may be very, very different in very different customer segment, geography, etc., etc. Right? And I think what it seems to solve is the enablement and bringing something that for us may seem not even very convenient, but the needs it's satisfying are even more fundamental and basic. And I think translated to, again, the UK market and the SME market in the UK and what we see in the report, I mean, SMB sees still payments as such as they were a way to solve and helping them optimize their expenses, their operational efficiencies. Payments that large companies on accepting or paying for solved very efficiently. But SMBs are not always having the access to those solutions, and they still struggle to focus on what's important for them, which is make the business happen. And they have very limited resources operationally to tackle with the complexity of multiple systems related to payments, orders, customer communication. So that said, I think there may be a value that we are missing to see, having our understanding of the needs, and the needs somewhere else may be very, very different.
Charlotte, it's a really interesting point, isn't it? You know, I mean, as much as we describe the journey and it might sound super clunky, there's also a point here maybe about reaching consumers where they are, you know, WhatsApp being one of the most used messaging and social media platforms in the world. There's sort of like a scale and a reach point here as well that you don't want to overlook.
I'm going to respectfully disagree on this one because, you know, having been, seen the journey in emerging markets and the impact of QR codes, that is what they rely on. This is how it works, and they've made the user journey work for them. So what we're going to do is translate that to Marcin's point on bringing that back to the UK. It's going to be a different experience, and QR codes still really taking off here. But you go to Brazil and you pay by Pix. So I don't know if anyone's paid by Pix. And you would sit there and say, "Oh, this is a really terrible journey. Oh my God, I got to pay by Pix." And you'll have millions of Brazilians saying, "Don't be so stupid." And the same in India, same in Indonesia, same in Philippines, because those QR codes allowed people to pay for the first time when they didn't have a bank account, and that was the method of transferring money or value from one to the other. So I think we have to be careful with saying, "Well, yes, of course that journey doesn't work." I mean, some of the open banking journeys, sorry, OBL team, because I know you're in the audience, that doesn't work because it's not single click. But that bit will all be sorted. And finding different ways of doing it through the big tech firms is probably the bigger thing. And anything that helps SMEs have a single point checkout has got to be a good thing, because how many people do they lose along the way? And that's the challenge we have. We talked about Klarna being a different way of paying. Why do people like Klarna? Yes, because it's a different way of paying, it's all in one place, but also it's just a really easy checkout journey. And that's what we want. So the moment, yes, it's not going to work here, we've got to take a picture of the QR code, but emerging markets have got this sorted, and they are flying on the data they're collecting on the back of that payments journey.
I think it's such a good call out, because it's easy to sit here for us and say, "Oh, it's a clunky journey," but fundamentally what you're talking about is inclusion.
It's inclusion, it's realising we have a lot to learn from the emerging markets of how they're doing it, and we're never going to follow the same journey because we've got legacy banks, legacy infrastructure that's really difficult to move. But they have a lot to learn from us on the thought leadership piece and how we're doing it, and then I think the best way is when you learn from each other, and I think that's not what we're so good at here. But I can tell you, the Brazilians are going, "What are you doing next on open banking?" And we're like, "Oh my God, you've rolled out open finance to everybody and now going down to SMEs." And the same in India, and vice versa.
Such a great point, Charlotte. Sarah, what was your reaction to this one?
Well, I'll be honest, and it's highly amusing quite how many WhatsApp messages were exchanged between me and Kate this morning going, I can't what? And entirely to Charlotte's point, we couldn't work out how it was supposed to work. I would argue that there is this smidgenest bit of kind of a really poorly written press release involved in that as well. But I think the points that I've already made are really interesting, and I think what we're seeing, WhatsApp or any other channel aside, is the point that payments can now be conducted through any channel. And, Charlotte already touched on it, but you now expect to be able to pay at the point in the journey that you are making the purchase. You don't want to go somewhere else. You don't want to go to a different page. For all the security it adds, opening your phone app up to go, yes, this is me making a transaction on your phone whilst you're making a purchase on your laptop or your tablet or whatever it is, takes you away from that payment journey. So I think, for me, the takeaway was, well, yes, of course, if this is how people buy things in that part of the world, then of course that's how they want to pay for things. If that's how they're shopping for things, if that's how they're finding things, if that's kind of the channel by which they interact with that business, then of course they want to be able to pay through that channel as well. And I think it's going to be really interesting as we see the development of agentic commerce, how that evolves, and whether we continue to have these sort of segmented payment channels, or whether it just becomes, it doesn't matter where you are or whatever you're doing, your agent's like, yeah, I'll pay for that because you've agreed that's what you want to buy, and that's the price you want to pay for it. So, yeah, I will fully hold my hands up and go, yeah, hadn't got a clue, was completely baffled by the QR code piece, but the important piece from my perspective is I want to pay on the channel at which I'm looking at to make that purchase. And that could be TikTok, it could be WhatsApp, it could be, I'm sure that somebody out there will tell me a channel I've never even heard of, but, that's the point.
I think it's going to be really interesting that as customers have more and more options for different ways to pay. Obviously, the guys at Fireblocks talked about stablecoin payments coming in. There's going to be so many different ways for customers to pay, and it's great that things like this are giving businesses more options to receive payments. But I know from speaking to small business owners that they then have huge amounts of the more complex the variety of payments in. Obviously, it's great for increasing kind of your revenue and your turnover, but the amount of administrative complexity that could create for some of these small businesses, I think unless the systems at the back end can adapt and can start to sync all of these different data sources in. We've seen the success of things like Square, because they took the physical point of sale terminal and then were able to sync all of that data through into kind of the cash flow and lending and all these other things which have helped small businesses to kind of automate and access credit and things like that. I just hope that these two things can grow in balance, so that yes, we get more choice for customers, but we don't give small business owners an even bigger headache when they were just starting to get their heads around how they might use some of these platforms to streamline, because small business owners have gone through a heck of a lot. I mean, forever, but especially in the last few years.
It is a great point, because it's one thing making payments a lot more seamless and convenient, but if you don't solve for the reconciliation and the financial reporting and all of that sort of stuff, then maybe you're solving one problem and creating another. Yeah. Jump in, Charlotte.
Do you think we're thinking a bit 1990s here, though? I mean, surely we're going to say, right, here you can take payments by WhatsApp because everyone wants to pay by WhatsApp. Okay, that's going to go straight through to your accountancy software and done. There are plenty of people in this room who would be able to sort out that journey. So I think, I agree. At the moment, it's we can't see it through because we're not thinking back to the original customer. But I personally think somebody could solve that in a weekend if they wanted to. It just depends whether it's the right thing for UK businesses, to what you were saying, Kate, and at the moment that wouldn't be the right thing for WhatsApp, but it may be something else that comes along and completely changes the way we work.
Yeah, completely. And look, Kate, I mean, as you said, you've done a lot of research into small, medium businesses. The sort of journey aside, I guess you can see this solving a particular pain point, particularly for sort of micro businesses and solo entrepreneurs. Yeah,
no, absolutely. I completely agree with Charlotte. I think this could be, I think we've definitely seen the pace of change we've seen in the technology available to SMEs, that we know that a lot of these capabilities are available. And yeah, I definitely think this could be solved. I just don't want us to get so excited about options for customers and forget about also solving for the SMEs at the administrative side as well.
At the risk of being that person, Ross, I promise I'll make it quick. To go back to my point about agentic commerce, what's really interesting, if you look at Google's A2P protocol, is the number of partners that are involved. So you've got MasterCard, you've got WorldPay, you've got PayPal, and they're all working together. And I think maybe that is kind of part of the evolution that you were talking about, Kate, which is that as a merchant, it doesn't really matter to me how I get this money. What matters to me is that the person who's buying is the person they say they are, and that this is a secure transaction. And however that comes to me, I don't really mind. So I think that's that network, building a network capacity is something that, as we see these new payment solutions come to the fore, something we've really got to watch out for. Like, the payment providers are going to have to work together on this, exactly to your point, to overcome that really significant pain point on the merchant side.
Absolutely. Excellent. I love how we flipped that story on its head. It almost like it started quite negatively, and now I think we're finishing on a really positive note. Thank you, Charlotte. That's it. We do have a very special celebration, a little surprise lined up for you all. You were all given, or they were on your seats when you came in, party poppers. You've either lost them or you've been holding on to them for a long time now. Just hold on to them for a few more minutes. Now, over the years, and over 1,000 episodes, we have had hundreds of amazing guests and some absolute legends join us on Fintech Insider. So to mark our 1,000th episode, we thought we'd take a short trip down memory lane and play you the OG introduction. I know all the panel are, I'm getting so nervous of what's happening over this side of the panel. Please do just hold them just for another second.
We're reading the instructions, okay?
Yeah, all right, that's fine,
safety conscious over here.
Oh my God, chaos. I'm not joking when I say this is the first After Dark that we've done where we had to get a health and safety briefing before we came on stage.
Pyrotechnics. We've never had pyrotechnics before.
So we thought we'd play you the OG introduction we used for episode 1 many moons ago, just so you guys can see how far we've come, if you'll indulge us. You are in for a treat, so let's hear it right now.
Good afternoon, my name is David Breer. Welcome to the very first Fintech Insider. On a weekly basis, you're going to be hearing from some of the smartest people in the industry. The four of us will bring you the latest news from around the globe in fintech banking, but firstly, I should probably introduce to you the hosts.
And yeah, so just for the record, that was the first podcast episode ever recorded underwater. We do have the Guinness Book of World Records. Like I said, we have come a long way. Guys, thoughts on that? Some fun pictures. I don't know that you could actually hear any of what was said, but...
Was that David?
I think so.
Oh, wow. Yeah.
Even when he's not here, he still gets his little piece. It's good. All right. Well, look, just before we go to our final surprise, that wasn't the surprise. I'd like to say thank you so much to today's guests, Marcin, Charlotte, and Sarah, and thanks again to our wonderful sponsors, Marqeta, Fireblocks, and Sackle, for all those spicy puns. A huge thank you to all of you in the room. Thank you for all of your wonderful participation. And those of you, of course, who are listening at home, you're all incredibly valued members of the Fintech Insider community, and we couldn't do it without you. But before we go, one last thing. We were going to go full birthday party and light up a cake with 1,000 candles, but apparently that's even more health and safety briefings. So we decided that we were going to mark the occasion properly. So I'm going to give you a little countdown. It's going to come up on the screen. I would love for you all to grab your party poppers, like stand up, get ready, help us celebrate 1,000 episodes of Fintech Insider in style. We're going to count down from 5 to 1. Yeah, panel, stand up. I can't hold my mic and let mine off, so I'm just going to let you guys do it. All right, Alex, let's have that countdown. 5, 4, 3, 2, 1. Fintech Insider! Thank you, everyone. Hope you had a great night. We'll see you guys at the bar. Go get some beers, go get some food. Enjoy the night. Thank you.
That's the sound of the fully electric Audi Q6 e-tron and the quiet confidence of ultra-smooth handling. The elevated interior reminds you this is more than an EV. This is electric performance redefined.
In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001 or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's VANTA.com/insider.